Hey everybody, this is problem 10-12B. This is on the Chapter 10 assignment number 2. So Lyman purchased a new piece of equipment to be used in its new facility. $380,000 piece of equipment was purchased with a $40,000 down payment and with cash received through the issuance of a $340,000 8% 5-year mortgage note payable. The term provided for quarterly installment payments of $20,792. So every quarter they have to make a payment. And they make them at the end of December, end of March, end of June, end of September. So round all computations to the nearest dollar. Number 1, prepare an installment payments schedule for the first 5 payments of the notes payable. 2, prepare the journal entry related to the notes payable. 3, show the balance between sheet presentation for this obligation for December 31st, 2014. Okay, and there's a little hint there which we'll look at again when we get back to that point. So part 1 is to prepare an installment payment schedule for the first 5 payments of the note. So what we want to do is set this up so we have a column for our quarterly interest period. We have a column for our cash payment amount, column for our interest expense, a column for our reduction in principal, and a column for our principal balance. Now for ease, I'm going to make a couple of adjustments here. One, I'm going to tell Excel that I want these cells to wrap text. And we'll hit OK. And we'll also center them just so they look a little nicer. There we go. All right, so that's the first thing we're going to do. Now, I'm going to start here and I'm going to have the issue date. All notes start on their issue date. And then when we do quarter 1, that'll be at the end of the first quarter. And they want 5 quarters. So at its issue date, it had a principal balance of $340,000. So what's nice about Excel is we can say, hey, we want all of these cells to be dollars. And because the problem told us to round to the nearest dollar, we can reduce the number of decimals. So it automatically does that rounding for us. All right. Actually, I didn't have to add that column, did I? Because that was the column for the... All right. So the cash payment we know for an installment loan is going to be $20,792 each period. So we can just copy that and paste it in to each of the periods or each of the quarterly periods. So that's easy. Second is we have our interest expense. So our interest expense is going to be the amount of quarterly interest times the principal balance from the previous period. So we know that this is a 8% note. That 8% represents a whole year's worth of interest because those percentage rates are always listed in an annualized form. So our interest per period then, if these are quarterly periods, would be 1/4 of that. So we take 8% divided by 4 and we get 2% per period. So our interest expense here is going to be the quarterly rate, which is 2%, times the principal balance. And that just might make it easier for us to think about. So I'm going to say this equals principal balance times 0.02. And that's the amount of our interest expense. So our reduction in principal is going to be the amount of that payment of $27.92 that wasn't interest expense. So we find that just by saying this equals the cash payment minus the amount that was interest expense. That's the reduction in principal. So after we've made that payment, our new principal balance will be the old principal balance minus the reduction of principal. So there's year one. I'm going to go ahead and walk through doing it for the next 5 years, but just so you know, once we've got these formulas in, we could just fill it down and Excel would do all the work for us. So if I did this, I'd be done with the problem. But I want you to see the process a couple more times. So again, to find my interest expense, I'm going to multiply the principal balance from the previous period times 0.02 or times 2%. That'll give me the interest expense. The reduction in principal will be the amount of the cash payment minus any amount that was interest. And then the new principal balance will equal the old principal balance minus any principal we've repaid during this period. Year 3, find our interest, taking the last period's principal balance times the quarterly interest rate of 2%. Our reduction of principal is going to equal the amount of the cash payment minus the amount of the payment that was interest. And our principal balance will equal the old principal balance minus the reduction in principal. Do it again. This is going to equal the old principal balance times the quarterly interest rate of 2%. Reduction of principal is going to be the cash payment minus the amount that was interest expense. The principal balance is going to be the old principal balance, last period's, minus any amount of reduction for this period. And one more time, this will equal last period's principal balance times 2%. Reduction in principal is going to be the cash payment minus principal balance. Minus the interest expense. And the principal balance will equal the old principal balance minus the reduction of principal. There we go. One more time, I'll show you how we can use the fill tool. So what we've done is we put in formulas. Oops. We put in formulas for all of these already. So if we just tell Excel we want to copy those formulas but move them down for each line, it'll do all the work for us. So that's number one, prepare an installment payment schedule. Number 2 is prepare the journal entry related to the note payable for December 31st, 2014. So the journal entry, so that would be, let's see, so if this one would represent, let's see, they purchased this, they signed it on October 1st. So this would be the December 1st, 2014 entry. Right, and we could do that if it made it easier for us. December 31st. Right, that's how those are represented. So it wants us to do the journal entry for this transaction. So it would look something like this. Interest expense, $6,800. Mortgage payable. Remember, that's the liability. That's the reduction of principal, $13,992. And then our cash goes down by the whole amount. So that was part B or part 2. Number 3 is show the balance sheet presentation for this obligation for December 31st, 2014. So after this payment, what will our balance sheet look like? It also says be sure to distinguish between the current and long-term portions of the note. So we'll have a line that says current liabilities, and that amount is going to equal the amount that's due in the next year. And the amount of principal that's due in the next year will be represented by the reduction of principal for the next 4 payments, since these are quarterly payments. So those 4 amounts right there, they add up to $58,823. Again, this is the balance sheet presentation, so I'm not expressing this here as debits and credits anymore. This is what the balance sheet will look like. And then in the long term, we'll have mortgage payable. And that will be the amount that the principal balance due at the end of the next year. So the reason it's not this amount is because we just listed all of this as a current liability. Okay? It's really the total amount. So it's really this amount minus all of this, which comes out to that. So $267,185. So our total liabilities. There it is. You'll see we're actually off a little bit here by $1. That's just because of rounding. But it should be, this is the amount that you owe after you've paid that payment. That just happens to also be the same as all of the principal you'll pay off next year minus the amount you'll still owe at the end of next year. Anyway, that is it for problem 10-12B. Let me know if I can help in any other way, or if you have if you will contact me with an exercise or a problem that you're struggling with, I will make one of these little videos for you. I'll post it out there for anybody who wants to look at it, but I'll make one for you. So I'm not opposed to working through a problem for you, or to calling you and talking it through on the phone, or trying to give you an explanation through email. So let me know if I can help you. Have a great day.